WPI September data which has come through. So it's coming at around 0.13% versus 0.5% on a month-on-month basis. So that's basically the preliminary number that has come through at this point in time. We will wait by for the internal details, but in the meantime, we do have Sakshi Gupta, who's the Vice President and Senior Economist at HDFC Bank, who's joined in to discuss this. Sakshi, hi, welcome to the show. If you could just take us through, the decline that we've seen. It's a little bit of softness that we've seen in terms of the WPI. How does it stack up versus what your estimates were for the month of September?
Hi, good afternoon. Thank you for having me on the show. So you're absolutely right. This number on WPI at 0.13 is actually lower than what we were estimating for the month. Our forecast was close to 0.7%. So clearly, it's a downward surprise. Look, over the last couple of months, we have seen that WPI inflation has been moderating, and the moderation has been very, very broad-based. Right. So you've seen, metals, basic metals, crude oil prices, natural gas prices, all these items cool off. Moreover, even food inflation, which is, part of the primary articles within WPI, month on month, they've been coming down. That is reflected even in the CPI data. So broadly, from a wholesale perspective, I think this inflation number, again, is a downward surprise, and we expect that over the coming months, given the global commodity prices trajectory, plus, how, food inflation domestically has been progressing, I think both these, suggest that wholesale inflation will remain in, sub 1%, also for the remaining part of this year.
Okay, sub 1% for the remaining part of the year is what we could watch out for. But Sakshi, also right now, like you're mentioning, food inflation, actually this time we're seeing a deflation, 1.99 downtick. That's a negative number there versus 0.21% on a month-on-month basis.
Yeah.
What should we watch out for here? Do you think that this deflation will continue here on the food side as well?
Well, I would expect, this, there are base effects, etc., that tend to influence the, monthly numbers. So in certain months, you could get, deflation for food inflation. But, broadly, my sense of food inflation is if you even look at mandi prices, you look at how, food production in general has been in this, summer cropping season and the last two seasons. There is sufficient supply in the market, which is causing food prices to remain very, very low. And the momentum on the food side is both reflected in the WPI as well as the CPI numbers that are coming out. Moreover, even on the global side, if you look at, food prices globally, you look at commodity prices locally, or you look at globally, or you look at metal prices. I mean, there is a general, moderation, and certain sections, a deflationary trend that is being, observed.
Okay. How did gold prices tie into this number, according to you, Sakshi, and what might be the impact going forward?
Well, look, for gold prices, yes. I mean, in the month of September, we did see gold prices actually inch up. This has been a story on the gold front for a number of months now, right? So it is, to a certain extent playing a role. But I think gold prices tend to have a bigger influence on the CPI series that we track. And on the wholesale front, basic metals, etc., have the largest weight when we are looking at, manufacturing wholesale inflation. So I think that bit has been very, very soft and has outweighed any sort of upside pressure that you might see from gold. I think gold is a story more dominant when we are looking at the retail inflation, basket, where consistently we have seen that core inflation has been, sticky, has been actually moving up. And we saw the recent numbers that came out for September, that, gold prices were pushing up core inflation, over the last couple of months.
Sakshi, just now with the CPI number that's coming yesterday, as well as today's WPI number, now what could we start seeing coming in from the Central Bank of India, the RBI side? What should we see from that front?
Look, undoubtedly, in the last policy, the central bank has, talked about the fact that, inflation trends do suggest that now there is policy space that is opening up for further rate cuts. I think that we closely watch out for the October inflation print, which I think can be sub 1%. And depending on the GST impact, it could be a very, very low number that could come in. So that would further kind of strengthen the argument for the Reserve Bank to look at perhaps a little bit more of policy easing, through the repo rate, through the policy rate. And I think that the December policy is a live policy now. Clearly, moderating inflation does provide space for the central bank to act and provide some amount of, further support for, domestic growth.
So I'm just going to quickly ask you about your rate cut estimate for, say, the next two meetings or what you're envisaging in the next 3 to 4 months. But just before that, wanted your thoughts on the GST rate pass on. You said that the CPI number could be much lower than expectations because of the GST cut pass on. But is that going to be sustainable, according to you, Sakshi?
Look, so, of course, this will be a one-time impact, right? That will, where there is a change in price and then it will be in the system for the next 12 months, right? So depending on the pass-through of GST rate cuts, your overall inflation trajectory for the coming 12 months, till October 2026 could actually come down. Right. So you're right that this is a one-time thing, that will pull down the inflation numbers. But from a monetary policy perspective, look, ultimately, it implies that your average inflation for Q3, Q4, and then Q1 next year is, of course, going to be, much lower. So, for instance, I'm expecting inflation to average at 1.8, 1.7, 1.8% for Q3. With a downside risk to my forecast. And Q4, I'm estimating below 4%, so 3.9%. While this is temporary, but it's still going to be there for the next 1 year at least.
Okay, and quickly, if you could just pencil in what you are estimating from the RBI in the December policy, and maybe in the meeting after that as well.
Right. So I think that my forecast for the policy rate in both the December and February policy is really contingent on some of the growth data that comes out, high frequency indicators for October, November. I think if we continue to see some amount of disappointment, in terms of domestic recovery and the push to consumption from GST rate cuts, plus if there are no positive news on the tariff front, then I think December is a live policy and we could see the RBI cut the policy rate by 25 basis points, in the December policy. I think February right now is a little, still a lot of unknowns for us to make an educated, forecast on what happens in the February policy. As things stand today, my sense is that the RBI has space to bring down the repo rate down to 5%. If required and if growth, severely disappoints over the coming months.
Okay, all right, Sakshi, we're going to leave it on that note. Thanks very much for joining in and speaking with us and giving us your perspective in terms of the CPI data, which has come in for the month of September at 0.13%. We have the core CPI, which has also come in at around 1.3%. So that's the data which is coming in 1.3% versus 1.7%. So there's a softening which has really taken place in terms of core CPI. We'll take a short break. On the other side, we'll focus on the healthcare sector and connect with Kevan Movdawala of EY, Parthian India, and Varun Khanna, who is the Group MD, Quality Care India. Stay tuned for that conversation.